First, welcome to the video. If your auto loan is 60 days late, you are likely in default, and repossession risk can become immediate. This video explains what 60 days past due really means, why waiting for 90 days is dangerous, and precisely how to act today to reduce repossession risk. We will cover options like hardship programs and forbearance, the consequences of delay, and a step-by-step call script to use with your lender. Stay through the end for key takeaways, diagrams to visualize timelines and decisions, and quick quizzes to test your understanding. Next, here is our roadmap. We will begin by clarifying what 60 days late means legally and practically. Then we will visualize the timeline, from first missed payment to repossession risk. After that, we will move into immediate actions you can take today, including specific programs to request. We will examine the costs and credit impact if repossession occurs. We will debunk common myths and test your understanding with quick quizzes. Finally, we will summarize with key takeaways you can use right now. Moving on, the cold reality is that missing 2 full payments on a secured vehicle loan typically places you in default. In default, many lenders, especially those serving higher-risk borrowers, may initiate repossession right after the 60-day mark. Institutional banks may sometimes offer more leniency, but specialized finance companies often act quickly once the account hits day 60. Assuming you have until day 90 can eliminate your leverage to negotiate. Now let's define what 60 days late really means. In most auto loan agreements, 2 full missed payments trigger a contract default. There is no universal 90-day grace period. After default, the lender typically gains the contractual right to repossess the vehicle, often without prior notice, depending on state law and agreement terms. The exact timing differs by lender and jurisdiction, but the risk markedly increases right after 60 days. Furthermore, your leverage to negotiate decreases once you are in default. Remember, default does not guarantee immediate repossession, but it enables it. This is why immediate action is essential. Next, examine the timeline. It begins at day 0 when the payment is due. Through days 1 to 29, late fees and collection contacts may begin. At day 30, the first missed payment is recorded, and collections activity typically increases. Around day 45 is an urgent window to contact the lender. At day 60, default is often triggered under many contracts, which enables the lender to repossess. From days 61 to 75, the repossession risk is high. From days 76 to 90, actions escalate, and your leverage declines further. Notably, the best windows to call the lender, provide hardship documentation, and request forbearance are between days 30 and 60. Furthermore, consider lender-type differences. Institutional banks may provide limited leniency or structured workout options, and may sometimes be slower to trigger repossession. They often require more documentation when evaluating hardship requests, but may provide more favorable reinstatement plans. In contrast, specialized finance companies commonly act quickly at or shortly after day 60. Their processes tend to be more policy-driven, with fewer deferral options and tighter timelines, often accompanied by higher fees and stricter reinstatement conditions. After that, act immediately. Call your lender today and avoid silence. Explain any verifiable temporary hardship such as job loss, medical issues, or disaster, and be ready to provide proof. Ask directly about hardship programs, forbearance, payment deferrals, loan restructuring options, or a due date change. Propose a realistic short-term plan, like a partial payment now and a specific date for full catch-up. Always request written confirmation for any agreement or grace period. Ask about reinstatement, where you pay the past due amount and related fees to restore the account, versus redemption, where you pay off the entire loan. And consider voluntary surrender only as a last resort, understanding the financial and credit impacts. Do not hide the vehicle or engage in confrontation. Prioritize safety and compliance with the law. Meanwhile, here is a concise call script. First, introduce yourself and verify the account. Second, state your hardship briefly, with specific dates. For example, that you lost your job on a given date and a new job starts on a future date. Third, indicate which documentation you can provide, such as an offer letter, a medical note, or an insurance claim file. Fourth, make a concrete payment proposal, specifying an amount you can pay today and the remaining balance by a specific date. Fifth, ask directly whether they offer hardship or forbearance programs for which you might qualify. Sixth, get exact details including amounts, dates, fees, and whether repossession activity will be paused.
Seventh, request written confirmation via email or the customer portal.
Eighth, set a follow-up call date and time to maintain momentum. Consequently, here is a quick comparison of common options. A hardship plan often lowers or defers payments temporarily, buying time but potentially extending the loan term and total interest. Forbearance pauses payments for a fixed period, providing immediate relief, but interest may accrue and you may face a lump sum or payment plan later. A payment deferral moves the missed payments to the end of the loan, which is simple to understand but extends the loan and may include fees. A loan restructure adjusts the rate, term, or due date, producing a more affordable monthly payment, though it often involves credit review and a longer term. Reinstatement brings the account current by paying the past due amount and fees, which is fast but requires available cash. In addition, review this decision flow. The starting point is 60 days late, which generally means default. The first decision is whether you call the lender today. If yes, you provide hardship proof. Then the next decision is whether you are eligible for relief. If yes, you may receive forbearance, deferral, or a restructure, leading to a paused repossession and a plan to follow. If not eligible, you can offer a partial payment now with a firm date for the remainder.
The next decision is whether reinstatement is possible.
If yes, paying the past due balance and fees makes the account current. If not, consider voluntary surrender only as a last resort, with a plan to minimize fees and repair credit. If you do not call the lender, the risk of repossession remains high, and seizure can occur at any time.
Moreover, be aware of the true costs of repossession. Towing, storage, and administrative fees accrue quickly. The vehicle will often sell at auction for less than the remaining loan balance, leaving a deficiency that you still owe. Additional late fees, repossession fees, and legal costs may be added depending on your contract and jurisdiction. Your credit can be significantly harmed for years, making future borrowing or refinancing more difficult. If your insurance coverage has lapsed, you may face additional complications. The loss of transportation can also affect your ability to work, compounding the financial stress. Next, here is a quick quiz. The question asks, which statement is most accurate at 60 days past due on a secured auto loan? Option A says lenders must wait 90 days before repossessing. Option B says many lenders can legally initiate repossession right after 60 days of missed payments. Option C says repossession cannot occur if you plan to pay next month. Option D says calling the lender makes no difference to repossession risk. You may pause the video now to consider your answer. We will discuss the correct answer in the next section of the video. Then, the correct answer is option B. After 2 full missed payments, many contracts consider the loan in default, enabling the lender to initiate repossession. Timely communication and documented hardship can influence whether they pause or proceed. Afterwards, let's clear up myths. First, the belief that lenders always wait 90 days is incorrect, as many act right after 60. Second, many jurisdictions do not require prior notice before a vehicle is repossessed. Third, promising to pay later does not prevent repossession unless there is a written agreement from the lender. Fourth, remember collections teams are focused on securing payment and timelines. Communicate proactively and assume processes are advancing. Fifth, hiding the car can escalate matters and is not a solution. Always prioritize lawful approaches. Finally, you are not powerless. Calling your lender, documenting hardship, and proposing a realistic plan can materially improve your chances. Additionally, this pie chart illustrates outcome tendencies for borrowers 60 days late. A majority of better outcomes align with proactive contact and a realistic plan. A substantial share involves formal relief like forbearance or deferral. Some cases resolve via reinstatement. A smaller portion choose a managed voluntary surrender as a last resort. Unmanaged repossession represents the negative outcome most associated with lack of action. The overarching message is that action reduces repossession risk. Next, let's do another quick quiz. The question asks for the single most critical first step when you hit 60 days late. Option A is hiding the vehicle. Option B is waiting until your next payday while staying silent. Option C is calling the lender immediately and requesting hardship or forbearance options. Option D is assuming you have 90 days before any action.
You may pause the video now to think through your answer. We will reveal the correct choice in the following segment.
Then, the correct answer is option C. Immediate, proactive communication with your lender and a clear request for hardship or forbearance programs is the action most likely to reduce repossession risk and create an agreed path forward.
Finally, a brief disclaimer. This material is for education only and is not legal, financial, or tax advice. Laws, lender policies, and contract terms vary by jurisdiction and individual circumstances. For guidance tailored to your situation, consult a qualified attorney, experienced consumer law professional, or certified credit counselor. In summary, these are the key takeaways. First, 60 days late often equals default, and repossession risk can be immediate. Second, silence eliminates leverage. Call your lender today. Third, ask for hardship, forbearance, deferral, or restructure and get all agreements in writing. Fourth, propose a concrete plan with specific amounts and dates and provide supporting documentation. Fifth, understand the difference between reinstatement and redemption and their costs. Sixth, anticipate fees and protect your credit by acting quickly. Seventh, stay safe and lawful and avoid confrontations or attempts to hide the vehicle. To wrap up, your next step is to call the lender and document your hardship today. Ask for forbearance or a deferral and propose a realistic plan. Get every agreement confirmed in writing and set a follow-up date. Acting today can prevent a tow tomorrow. Finally, share in the comments what action you will take in the next 24 hours. As a final note, thank you for watching. If this video helped you, please like, share, and subscribe. Add your thoughts or questions in the comments, including your immediate action plan. Your engagement helps more people see this information when they need it most.